Hello everyone, welcome back to the channel. I hope you had a nice weekend to prepare for the week ahead, understanding your support, resistance levels, trying to understand the patterns the market is forming. And by the way, let me know in the comments, what are you trading, the patterns that you are tracking, commodities, Forex, equities, cryptocurrencies. Let me know in the comments below. It's always a pleasure to try to understand what other people are doing in the financial markets. And for today, that's one of my objectives, is to share my observations and my views inside the Forex market. I will also cover, as usual, gold, silver and crude oil, SPX 500, the German DAX and the Bitcoin, just to complete the sequence as usual. So I hope the information that I post on the channel brings some value to your journey. So I hope you take some valuable information from these patterns and from my observations. And for today, I want to start as usual with the DXY. The DXY is now trading back to the monthly fractal support level, $100.15. This is a monthly fractal support from last September. I called your attention on my last video to this fractal support level, but most important, last week we called your attention to this potential resistance level at 101.97. This is a fractal resistance printed right there last week. Once I was filming the video, and we were seeing some signals for retracement for the DXY. At this point, most important, monthly fractal support level, it's also acting as a neckline for this head and shoulders pattern formation. So basically I admit that a clear violation of this support will trigger a move towards 98.69, 98.70. We have also 98.91 potential bullish crab pattern projected for the DXY. So basically we have a convergence between the default target for the head and shoulders and also the bullish crab pattern completion point at 98.91, the golden Fibonacci extension level. As you can see, the DXY it's now struggling to break below the channel support, but usually after confirming a false breakout above the channel resistance, usually the market brings and offers you a violation of the channel support. Usually that's something to consider. So a clear violation of that support of course will trigger momentum to the downside after breaking the channel support, but also, as I said, the monthly fractal support level, horizontal support, acting as a neckline for the heads and shoulders pattern formation. Of course, we are seeing already the DXY actually we are seeing already the cable squeezing above the fractal resistance level. We saw an approach, actually a retest of this daily fractal resistance already at 134.02. We saw the price then starting to pull back already after retesting these levels. Patterns to consider: bearish crab pattern 113.42, actually 134.28. That's correct. Golden Fibonacci extension level for the cable, bearish crab pattern projected right below the monthly fractal resistance level. By the way, let's increase our time frame into a daily time frame. This may work as a handle for the cup and handle pattern formation that I mentioned before. So pay attention also for the potential, the potential breakout above these fractals and the rejection to recover those same levels of resistance. So if those levels turn into support, it may also support the move, to the upside and the expectation for the continuation pattern, the bullish continuation pattern, the cup and handle pattern formation. Let's go again into a lower time frame. Let's reduce into a 2 hours time frame chart in order to pay special attention to this bearish crab pattern at the golden Fibonacci level, right below the monthly fractal resistance level. That pattern, if completed, should target the 38% Fibonacci level, and as we can see, we have the default target for that pattern converging with the intraday resistance, actually the fractal resistance at 133.60. So that's something to consider also for the Kiwi, for the cable, I'm sorry, but also for the euro versus the dollar. We are seeing the price threatening the intraday resistance. We have a symmetrical pattern projected at 133.33, three-wave structure to the upside. We are now threatening the resistance level. If the price, of course, if the price recovers these highs again, it may be forced to spend more time inside this range. Okay, so nothing granted here. This is pure speculation, and the patterns that I'm projecting are only based on the price structure that we have at our disposal at this point. If the price starts to change, I will need to adapt, and you know I need to start to try to identify the next sequences. At this point, and because the market did not confirm the violation of this fractal resistance, we are seeing the euro versus the dollar threatening not only the horizontal resistance level at 112.65, but also the channel resistance. This eventually may unfold into, you know, a larger period of consolidation for the fiber. Nothing assures me this will not transform into a bearish flag pattern, and at some point the market will trade below support levels and change all the perspective of continuation of a move to the upside. So basically, for now, this is one of the possibilities, of course. Symmetrical pattern 113.33, but also if that happens, it may open the door for a retest of the daily and previous highs, the daily fractal resistance at 113.81. And if that happens, I will shift my attention into a crab pattern formation, which is projected at the golden Fibonacci level, 114.31. One thing will guide us into another. Okay, we have a symmetrical pattern right there, 113.34 or 113.33. The market may offer some, may find some pressure there, but if the price somehow approaches the daily fractal resistance, you know, at some point I will pay attention to this potential crab pattern above. Moving forward, Aussie also threatening the resistance level, the internal or the intraday resistance, and that confirms what we may call a false breakout of the support. At this point, I'm tracking the possibility to form the shark pattern at 64.67, golden Fibonacci extension for the Aussie. If that pattern forms, I will expect then later a pullback, a retracement back to this 64.30 level, 64.27 level, the 50% Fibonacci retracement level for the Aussie. The Kiwi, it's basically the same way, it's exactly in the same position as the fiber, but without being capable to break above the intraday, let's call it an internal resistance at 59.18, which opens the door, very much the same situation here, opens the door for a larger period of consolidation, potential bearish flag pattern, and the violation of the support. That's something that we should consider if the price starts to consolidate inside this channel or inside this range already established. But if the price breaks above the resistance, or if the price, let's say, attacks the previous fractal resistance again, I will shift my attention into this bearish alt-bat pattern for the Kiwi at 59.83. Dollar versus the CHF threatening the triangle support. We have this kind of triangle, or if you wish, you know, but a wedge pattern formation. We are now threatening the support levels. There's a few elements also below this structure to consider, in particular the structure support of the channel of this parallel structure. You know that it's always important to consider the reinforcement of these, you know, the reinforcement of this channel may offer support for the pair to, you know, to hold for a larger period of time inside the channel, but also to consider the eventual breakout of the channel support and the possibility to unfold into other pattern formations. One of them 8147 below the previous daily fractal support level, a bullish alt-bat pattern at 113% Fibonacci extension level, and if the price fails to hold above these levels, we may see retest or the attack to on this previous fractal support level. Of course, it can change if the price breaks above the resistance, and an attack to the previous highs again will not be a surprise if the price recovers above this wedge or this triangle resistance level. Dollar versus the Canadian, very much the same. We are stuck inside this triangle of consolidation. We may see the price reinforcing the structural support of that triangle, and if the price bounces or starts to bounce from these levels, we may anticipate, the breakout above the triangle. At some point the market will break the resistance, will retest the resistance again, and will trigger a bullish breakout. Okay, the same may happen to the downside. If the price breaks the support level, we may see the price then retesting the channel support, the triangle support, rejecting it, and then the price may trigger momentum to the downside. Not completed yet, we need to wait for that, for price action, but at this point I admit we are stuck inside this triangle of consolidation for the dollar versus the Canadian. Nothing more to report. Dollar versus the Norwegian krone, I called your attention last week for the potential inverted head and shoulders pattern formation. We saw an approach to this previous retest of the previous lows, kind of forming the right shoulder, but then we are now approaching again these levels without being capable to retest and to threat the neckline of the inverted head and shoulders, which calls our attention to the potential breakout below support level. So if the price is not capable to break or to threat the neckline, eventually we will see the price breaking support. One thing will guide us to another. That being said, if the price breaks these levels of support, and by the way, I admit we are now threatening a neckline, a trend line support, or a structure support, and we can call it also another triangle for the dollar versus the Norwegian krone. Okay, so this is a consolidation triangle. If the price breaks below these levels of support, we have also other patterns then can start to form below these levels. So basically we push our Fibonacci tools and we measure all the between the lows and the previous high. So we measure the last swing high and we try to identify the golden Fibonacci extension, which points to 10.080, and that completes, or that may complete, the crab pattern at the golden Fibonacci extension level. So pay attention to both possibilities. Actually, the inverted head and shoulders pattern formation still possible if the price bounces from these levels without breaking the lows and breaking, implying the breakout of the resistance levels. The pattern may trigger, but the same way, if the price breaks below the support level, pay attention to the formation of the crab pattern below major support levels for the Norwegian krone. Mexican peso, this bearish momentum or this bearish pressure on the dollar points me into these, actually it keeps pointing me into this bullish crab pattern that I projected actually 1 month ago already at 1906 golden Fibonacci extension. We saw the price rejecting resistance again at 1956 with a trendline resistance also as an element of pressure. So I will not discard the possibility to see, the price breaking support levels and eventually being pushed to this crab pattern completion point at 1906, the golden Fibonacci extension level, also for the Mexican peso. So pay attention to the violation of the support, which may trigger momentum to the downside. Of course, I don't need to say we have resistance. Actually, let me update this level of resistance that I need to adjust to this fractal level. 1956. If the price breaks above these levels, we may see a retest or an approach to the previous highs again, but for now the pressure remains to the downside also for the Mexican peso. We saw last week the formation of this symmetrical pattern on the dollar versus the Japanese yen, 148.55. We saw then the pullback. I was expecting, actually, as I said before, the eventual formation of the pattern a few points above 152.62. I was expecting that sequence. We saw the formation. I called also your attention to the symmetrical pattern, which can always offer some pressure, in this case to the downside, and at this point there's nothing more to say than the eventual violation of this channel support. If the price breaks below the channel support level, actually the false breakout above the resistance, as I said before, usually it tends to offer a breakout of the channel support, so that's something to consider also for the dollar versus the Japanese yen, especially after recovering these previous resistance or this trend line resistance. As we can see, the price is now rejecting it again, which implies or which forces or favors more downside for the Japanese, actually more upside for the Japanese yen, in this case bearish momentum for the dollar versus the Japanese yen. Now we have the euro versus the Japanese yen, also inside the range between support at 161.59 and resistance, actually a new fractal resistance at 165.20. So this is basically the intraday resistance. In terms of shape and visual patterns, I think it's common sense. We have left shoulder, head, and eventually we are starting to unfold into the, starting to form the right shoulder. If that confirms, of course, we need to, take into consideration this previous daily fractal support at 161.59. It's acting as a guideline for the neck, for the heads and shoulders pattern. Let's also try to measure the potential target for that head and shoulders pattern formation. We search for the 200% Fibonacci extension level, and as you can see, 158.27, that points to the previous weekly fractal support level. So eventual heads and shoulders pattern formation, actually I don't want to be so dramatic, I need to draw this again. If we see a violation of the support, a retest of the neckline, and then a violation of the support level again, we may see that pattern unfolding. And this is the behavior that we should wait for. Once the price approaches the neckline, we need to see the violation below the support. We need to see the price retesting the support level again. This support will turn into a resistance level, and once that turns into a resistance, of course, at some point you will have an intraday fractal support at some point. Okay, this is pure speculation, but at some point the market will form a new fractal below the neckline, and once the price breaks below that fractal, you have an open trade to the downside. Okay, this is the price behavior that you need to wait for to confirm the violation of the neckline. Double top, double bottom, structure triangles, flag, whatever, independent of the structure that you are trading, that's the price behavior that you need to wait for in order to confirm the breakout of a specific price zone. Always wait for a retest of that structure. If it was a support, it should turn it into a resistance. If it was a resistance, it should turn it into a support. Once that confirms, you have an open trade. Head and shoulders pattern formation, eventual head and shoulders pattern formation unfolding for the euro versus the Japanese yen, with support at 161.59. Basically, this is the daily fractal support level. Yeah.
Transform your trading with Forex Analytix new platform. Introducing the complete market analysis platform, precision analysis, real-time insights. Subscribe today and save 40% on monthly subscriptions. Join us now and elevate your trading strategy.
Aussie versus the Japanese yen. We saw last week the formation of the bearish bat pattern at 94.64. Actually, I projected multiple situations here, multiple possibilities. One of them, it was a push above the resistance level in order to end all those stops positioned above. It didn't happen. Actually, the market reacted very well to the 88.6 or to the bearish bat pattern, not to the 88.6, because the price was forced to retest the previous highs, but nice reaction after forming the pattern. Pulling back, we have the 38% Fibonacci level at 91.98. That's a default target for that pattern, not achieved yet. At this point, we are unfolding to a smaller period of consolidation, eventual flag pattern starting to unfold for the Aussie versus the Japanese yen. We have also the New Zealand after the completion of this bearish shark pattern at 87.59. Also a nice push to the previous support levels. Default target for the pattern actually lies at the 50% Fibonacci retracement level. That's a shark pattern. The 38% fib lies at 84.68. The 50% Fibonacci retracement lies at 83.75. The same may happen here for the New Zealand versus the Japanese yen. Probably not completed yet, but probably a period of consolidation very similar as the one that we saw before, eventually to form the right shoulder for the eventual head and shoulders pattern formation that I'm projecting here, or that I'm trying to anticipate here for the New Zealand versus the Japanese yen. Curiosities: the default target for the head and shoulders pattern, 200% Fibonacci extension, points to 83.05. That's exactly the monthly fractal support from August last year. So I will not ignore the possibility for the pair to retest these levels again in the future, especially if the price actually unfolds into this head and shoulders pattern formation. Of course, this is not granted. Of course, we are only trying to anticipate the type of patterns, which pattern the market will start to form. Euro versus the pound, very much the same analysis as I did last week. We still stuck inside this kind of a descending wedge pattern formation. We are now back to the highs of the structure again. We were trading at the bottom at that point last week. We still have the bullish bat pattern projected at 83.63. That's the 88.6% Fibonacci retracement level, and ultimately the push below the support level and the formation of the bullish alt bat pattern, which lies at 82.61. That's a 113% Fibonacci extension of all this swing to the upside projected below the support level. So basically that's something to consider. Also, not only the bullish bat pattern at 83.63, which converges with the default target for the head and shoulders, by the way, but also the possibility to threat the violation of this previous weekly fractal support and the formation of the bullish alt bat pattern at 82.61. Now let's jump into the commodities. Gold threatening the resistance level after completing the bullish alt bat pattern also on gold. We called your attention last week to the previous resistance level, which may offer support. Actually, it did. The market was forced to print a new resistance at 32.50 32, and we are back to these levels again after forming support at 31.53. So we have a clear range on gold between 32.52 and 31.53. So that's the range at this point. If the price breaks above the resistance level, I will anticipate the formation the formation of another bearish harmonic pattern. This one is a bearish crab pattern projected at 33.53, and if that happens, that may help the gold market reinforcing this channel resistance level. Of course, there is always the possibility for the price to break above the channel resistance after this period of consolidation. Probably, and if that happens, we'll probably interpret this as a bullish flag pattern, of course, and of course that may trigger momentum to the upside on gold if that happens. For now, I'm paying attention not only to the violation of the range that we have between 32.52 and 31.53, as I said, but also the formation or the potential formation of the crab pattern at the golden Fibonacci extension level, which, as I said, may help the reinforcement, at least for a limited period of time, a reinforcement of the channel resistance and offer a retracement for us. The silver, we are seeing the silver market actually reinforcing what we may call a support, a structure support. We need to adapt these as actually this is kind of a flat support for silver, and we have resistance also above. We need to break above these highs in order to start to project some patterns. The range is very clear for both the metals. 31.65 as support for silver, 33.24 as resistance, actually the most recent resistance level. We have also the major fractal at 33.68. If the price breaks above the resistance, we have already some price action which allows me to try to identify some of the patterns, at least to the upside. We have the golden Fibonacci extension 34.22, and this opens the door for the crab pattern, very similar here for on silver. The crab pattern projected above $34.22, the golden Fibonacci extension. Of course, for that to happen, we need to see a clear violation of these fractal resistance levels, and everything can change if silver breaks below these levels of support. Okay, everything can change if the price breaks the structure support. Will force me to adapt into another possibilities. Other patterns may start to emerge, and at this point we don't have a clear picture on those, at least for now. The crude oil, we have also a nice flag pattern starting to unfold here. Eventually, actually not a flag pattern, but a consolidation period on crude after approaching the completion point. Actually, let me review this, probably a 1 hour time frame. Something missing here. I need a golden Fibonacci extension somewhere near these lows. So $60.35. This was one projection that I made at the end of the last week, actually, and we saw a new support a few points above $60.55. We saw a new fractal support, and crude since then holding above these fractals. I will not be surprised to see gold approaching the resistance again, especially with the dollar versus the Canadian starting to pull back. I will not be surprised to see crude oil, bouncing and retesting again these fractal resistance levels printed at 64.06. That's the previous major resistance level. On the other hand, we have also the possibility, and somehow I don't have my Fibonacci levels on my charts, but we have the golden Fibonacci extension at 62.84, and I need also the 224% Fibonacci level, which points at 65.65, basically the monthly fractal support level. This is a previous support level from, let me increase my time frame here. This is a fractal support from September, of course, and eventually we will see crude retesting these highs again. So, and if that happens, of course, we will see the formation of a shark pattern. This one at the 224% Fibonacci extension level, a push to this monthly fractal support, and you will see the formation of a new, a new shark pattern. This one printed at 224% Fibonacci extension level. So stay tuned to this pattern, because the reaction that I will expect after forming this pattern at the 224% Fibonacci extension will be the same that we saw once the price achieves the golden Fibonacci level. So basically, I will not be surprised to see, very much the same pullback that we have printed before for the shark pattern at the golden Fibonacci level, printed above from the 224. Okay, 224%. We market may start to to pull back again. Very much similar with the price reaction we saw once we touch the golden Fibonacci extension level. Always expect a retracement after the formation of that shark pattern. That's crude oil, and that will depend, of course, the violation of the highs, something to consider, and that's something else. There's always something else to consider. Violation of the support levels may trigger these as a bearish flag pattern, and of course we may adapt if that happens. Then we have SPX 500. I don't need to repeat myself. This is a bearish alt-bat pattern completed at 59.23. Expect a retracement after the formation of that pattern for the SPX 500. We have also the German DAX did not complete the pattern itself at 24.07, but we are very close to those levels, and in fact we have a new daily fractal resistance a few points below, marking the barrier for more more bullish momentum for the Dixie at this point. And actually we have a nice structure resistance to consider. If the price breaks above, of course it will complete the sequence just a few points above, so stay tuned to that possibility. Or if you wish, wait for the breakout of the structure support. Eventually that will converge with the recovery of the weekly fractal resistance at 23,732. So if the price recovers below these levels, of course that may trigger the retracement level. I'm waiting for this 113% Fibonacci extension level, 24,075. That's where the pattern will complete, and I admit that after completing this sequence the price may start to pull back. Okay, that's something to consider also for the German DAX. And to finish for today, Bitcoin also finally completing the bearish shark pattern that I called your attention last week, and I pointed at 106.60. Finally, 224% Fibonacci extension achieved on the cryptocurrency. So we anticipate a potential retracement on the cryptocurrencies at this point after the formation of that pattern, and that can push the Bitcoin back to 94.64, or actually $90 and $90,000 and $800. So that's basically, let me also measure these from the current price zone. That's something like an 11% drop on the cryptocurrency. So basically that finishes my approaches and my views for today. I hope that brings some useful data for your own market analysis and your own perspectives, and I hope that brings some value to your journey, and I hope to see you in my next video. Thank you for being here as always. Have a nice week trading the financial markets.